Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 439 on August the 7th, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Keel Infrastructure Corporation, the Tradr 2X Long SNDK Daily ETF, American Airlines, and First Majestic Silver Corporation. And we discuss 4 new trades on Hertz Global Holdings, the Direxion Daily MSCI South Korea Bull 3X ETF, SoundHound AI, and Ondas Inc. Now, it's always great to hear from listeners. If you have any questions about the trades presented here or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them or visit the YouTube channel for the Weekly Option. Now, the equity markets managed to finish the week at a new all-time high. The Dow Jones Industrial Average jumped 1,551 points, closing on Friday at 54,036 points. The S&P 500 index jumped 267 points, ending the week at 7,757 points. And now it's time for the topic of the week. The topic of the week is timing the trade. Now, some people will tell you that you cannot time the market. What they mean is that you can't perfectly buy the low or sell the top consistently. And in general, I agree with that. However, time in the trade or timing the trade definitely matters. There are certain times of the day that are prime for intraday pivots. Sometimes markets move at the end of the day or at the start of the day. Depending on what you're trading, timing may play a significant part on whether or not you are profitable. The longer your length of time that you intend to hold the trade, the less important timing is. Likewise, if you're making trades for shorter time frames, timing really matters. My main advice would be to remember your trading rules and to take the trade when your signals tell you to take the trade. Sometimes waiting even an extra minute can cost you possible profit. So if your strategy has a short time frame, timing matters. Take the trade when the markets tell you to take the trade and exit when your strategy tells you to exit. That may sound simple, but it can be harder than you think. So that's it for the topic of the week. Let's get into the review of last week's trades. We're going to start off with our covered call on Keel Infrastructure Corporation, symbol K as in Kilo, E as in Echo, E as in Echo, L as in Lima. At the time, the stock was trading for $3.98 per share. I looked at buying stock and selling the August 4 call at 45 cents. That could give us an 11.81% return in 3 weeks. Well, shares of Keel Infrastructure lost 10 cents, ending the week at $3.88 per share. The call option we sold lost 12 cents, leaving us with a net profit of 2 cents if we were to close the trade out immediately. Now, the stock price is still 35 cents above the break-even point, so this trade is still profitable. We would like for the stock price to go higher, but if the call expires out of the money and we continue to hold the stock after expiration in 2 weeks, we will look to sell another covered call option for the month of September. That would allow us to collect even more premium and increase our profit margin on the trade, so no adjustments are needed at this point. Next up, we have the cash secured put on the Tradr 2X Long SNDK Daily ETF, symbol S as in Sierra, N as in November, X as in X-ray, X as in X-ray. At the time, the stock was trading for $9.34 per share. I looked at selling the August 8 put at $1.55. That could give us a return of 19.38% in 3 weeks. Well, shares of SNXX lost 28 cents, ending the week at $9.06 per share. The out-of-the-money put that we sold is still out of the money by more than $1. The put has lost 75 cents, which means we can actually buy this put back and lock in almost 10% profit in the week. So no adjustments are needed at this point unless you decide to close the trade out early for profit. Next, we have our credit spread on American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. At the time, the stock was trading for $15.27 per share. I looked at selling the August 15, 14 half put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Well, shares of American Airlines grew 66 cents, closing at $15.93 per share. The out of the money put spread is still out of the money, and if the stock remains above $15 per share over the next couple of weeks, this spread will expire out of the money and will lock in a nice little win. So no adjustments are needed at this point on the credit spread either. And last but not least, we have the debit spread on First Majestic Silver, symbol A as in Alpha, G as in Golf. At the time, the stock was trading for $15.03 per share. I looked at buying the August 14 half 15 call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return in 3 weeks. Well, shares of First Majestic Silver picked up $3.36, ending the week at $18.39 per share. The in-the-money call spread that we bought is now even more in the money. The trade has worked out as planned so far, and with 2 weeks left until expiration, there's no need to make any adjustments. Nice trade. So that's it for the review of last week's trades. All new trades on today's show will use the August 21st expiration date. That's only 2 weeks away, making these trades a bit higher risk because there's less time to make adjustments. So that as a caveat, let's dive into the 4 new trades for this week. So I'm looking at a covered call on Hertz Global Holdings, symbol H as in Hotel, T as in Tango, Z as in Zulu. Stock ended the week at $2.26 per share. I'm looking at buying stock and selling the August 2 half call at 29 cents, hoping for a return of 23.45% in 2 weeks. Now you enter this trade by buying stock for $2.26 per share and selling the August 2 half call at 29 cents. This trade makes the most money if stock prices finish above $2.50 per share. The break-even price is $1.97 per share. In real terms, the stock purchase would require $226 and you would collect $29 for selling the option. Next, we have our cash secured put. I'm looking at the Direxion Daily MSCI South Korea Bull 3X ETF. Symbol K as in Kilo, O as in Oscar, R as in Romeo, U as in Uniform. Stock ended the week at $17.36 per share. I'm looking at selling the August 17 put at $1.90, hoping for an 11.18% return on capital in 2 weeks. Now you enter this trade by selling the August 17 put at $1.90. This trade makes the most money if stock prices finish above $17 per share. The break-even price on this trade is $15.10 per share. In real terms, you'll collect $190 for selling the put option, and you'll have $1,700 locked up just in case you need to purchase the stock. Our credit spread this week is going to be on SoundHound AI, symbol S as in Sierra, O as in Oscar, U as in Uniform, N as in November. The stock ended the week at $8 per share. I'm looking at selling the August 8 7/2 put spread at 19 cents. That could give us a maximum possible loss of 31 cents per spread. Now you enter this trade by selling the August 8 put at 45 cents and concurrently buying the August 7/2 put for 26 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $8 per share. The break-even price on this trade is $7.81 per share. In real terms, you'll collect $19 per spread that you sell and have $31 at risk. And our final trade on this week's show is going to be the debit spread on Ondas Inc., symbol O as in Oscar, N as in November, D as in Delta, S as in Sierra. The stock ended the week at $9.11 per share. I'm looking at buying the August 8/2 9 call spread for 33 cents. That could give us a maximum gain of 17 cents, or that's a 51.52% return in 2 weeks. Now you enter this trade by buying the August 8/2 call for $1.16 and concurrently selling the August 9 call at 83 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $9 per share. The break-even price on this trade is $8.83 per share. In real terms, you'll pay $33 to enter the spread, and your maximum gain is $17 per spread. So that's it for this week's show. Thank you so much for listening. I hope you are enjoying summer nearly as much as I am. I love summertime. Little warm weather. It makes me sad to see it go. I know the kids will be entering school soon, which is the first sign that summer is winding down. So get your last vacation in. Hope you're enjoying the time. Have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.